What happens if you go ahead and close that credit card right now? If you've ever hovered over the close account button or thought about calling the bank, there's probably one thought that stopped you cold. I know this is going to hurt my credit. Not might or could, you know it with absolute certainty, because you've heard it everywhere. From friends, finance TikTok and forums, even your banking app seems to imply that closing that credit card will tank your credit score. So you keep the card open, even though you don't use it, and at this point it does nothing but clutter your finances with an extra fee. What if I told you closing that credit card will not negatively impact your credit score? My name is Mandy, and I spend a lot of time breaking down financial rules and helping people sort credit-related issues they were never taught, but are still expected to follow. On this channel, we focus on how credit actually works in real life and other finance-related topics, so you can make decisions that actually help you instead of decisions driven by fear. If you are interested in anything finance and understanding how credit works, go ahead and subscribe and give this video a thumbs up. It helps the channel, and it tells me you want more content like this. And stick around until the end of this video, because by the time you're done watching, you'll know exactly what really happens when you close a credit card, when it can hurt you, when it doesn't matter at all, and how to make this decision without guessing. Picture this common scenario. You open a credit card early in your credit journey. Years go by and you don't use it much or even at all. At some point you think, I don't need this anymore, I should close it. But then someone says, that's your oldest card, don't touch it. Or, if you close it, your credit age will disappear. Or, I closed the card once and my score dropped. And now you're stuck. Here's the first thing you need to know, and this alone clears up most of the confusion. There is no penalty in FICO scoring for closing a credit card. FICO is the most widely used credit scoring system in the United States, and FICO does not have a negative rule that says you closed a credit card. That doesn't exist. In simple terms, it means closing a card will not tank your credit score. So if you close a card and your score changes, the change is coming from something else, not from the act of closing the card itself. That distinction matters more than anything else in this conversation. Say you have 3 credit cards. You barely use one of them and it has a $5,000 limit, so you decide to close it. What happens? First, and this surprises most people, your credit history does not disappear. That closed card stays on your credit report for about 10 years. Not only does it stay there, it keeps aging. If that card was 5 years old when you closed it, it will be 15 years old by the time it falls off your report. And during all of that time, it still counts towards your average age of accounts, or AAOA. Average age of accounts is calculated using all accounts on your report, open and closed, and it helps lenders gauge how long you've been managing credit overall, not just how long your current cards have been open. Which is why longer, well-aged credit histories are generally seen as lower risk. This is where a lot of people get tripped up. Some credit apps, especially free monitoring apps like Credit Karma, Credit Sesame, and Wallet Hub, show something called average age of open accounts. That number looks official, but it's not how real credit scoring works. Lenders don't use open-only age calculations. Both FICO and VantageScore include closed accounts in their formulas. So when you see that number change in an app, what you're seeing isn't your real credit age, it's a simplified metric designed for display, not lending. This is why people panic after closing a card, even though nothing meaningful actually changed. The one thing that can change immediately when you close a credit card is credit utilization. Utilization is how much of your available revolving credit you're using. Revolving credit means credit cards and lines of credit, not loans. So let's say you have $10,000 in total credit limits and you're using $1,000. Your utilization is 10%. Now imagine you close a card with a $5,000 limit. If your balances stay the same, your utilization goes up. That can cause a score dip. But utilization has no memory. It resets every single month. So even if your score dips because utilization went up, that dip disappears once balances come back down. This is why some people close a card and see a temporary drop, and others see nothing at all. The only situation where closing a card can matter is if you only have one credit card. If you close it, you now have no revolving credit. And because FICO gives points simply for having revolving credit available, you can lose those points when you close your only card. That's not a punishment, it's just how the scoring model works. This is the rare case where closing a card can cause a real drop. But notice something important. This isn't closing cards is bad. This is closing your only revolving card removes a category from your profile. Very different. Earlier in this video, I mentioned that a closed card stays on your credit report for about 10 years. Some people worry about what happens when a closed account finally falls off your report after those 10 years. Technically, yes, when that happens, it's no longer counted. But here's why it almost never matters in practice. Most people open new accounts over a 10-year period. Those new accounts age and naturally replace the old ones. So an old account falling off your report after 10 years almost never matters in practice. And the scoring benefit of average age of accounts tops out after a certain point anyway. So while this sounds scary in theory, in real life, it rarely causes damage. This is why people who closed cards years ago often see their credit continue to improve. So to summarize this video, I'll say this. Closing a credit card is not automatically bad. It doesn't erase your history, it doesn't reset your age, and it certainly doesn't hurt your credit score by default. What matters is how many cards you still have open, whether you're carrying balances, and whether you're closing your only revolving account. If this video helped clear up something you've been unsure about, consider subscribing. My goal here is to help you walk into financial decisions informed, confident, and prepared, not guessing and not surprised.